Hey everyone, welcome back to your weekly market outlook. This is for the 30th of September 2024. Obviously, tomorrow will be October. We're starting the final quarter in 2024. So let's get this started with a quick recap of what's going on last week. I think there's a lot of information in terms of the manufacturing numbers. Now, if we take a look at the manufacturing numbers coming out from the Eurozone and as well as the UK and the US, overall, generally, it's all negative across the board. So in terms of global manufacturing, we do see a little bit of a slowdown there. RBA kept rate unchanged at 4.35%. Swiss National Bank, as predicted, cut by 25 basis points. Again, they're not ruling out any potential currency intervention, so I think that will still be in play. It does boost the Swiss franc on that front there. In terms of the RBA, also a little bit more of a hawkish tone in terms of how they're going to be handling interest rate cuts in the future. At this point in time, nothing planned as of yet. I think market is pricing in for the earliest cut in December. And then we do have comments coming out from the Bank of Japan, as well as the LDP election, which is on Friday, causes a lot of volatility in terms of the yen process there. Final GDP in the US, as per expected, at 3%. Weekly unemployment claims, we do see a little bit of an improvement in terms of the weekly unemployment claims. PCE numbers a little bit on the mixed side there. In terms of the core PC, we do see a little bit of a softer number generally for the personal consumption expenditure in the US. All right, so for this week here, do keep in mind the Chinese market is actually going to be closed starting tomorrow for 1 week. We might see a little bit of a muted volatility coming out from the Asian session there. Manufacturing numbers that was just released earlier today points to a little bit of a higher number, 49.8, still below 50 at this point in time, but we do see improvements going forward there, and we're expecting flash CPI numbers coming up from the Eurozone. In terms of the estimate there, we are expecting a little bit of a softer inflation number there. We then have the ISM manufacturing PMI on Tuesday, JOLTS job opening numbers, which is also going to be on Tuesday. That's going to be market moving event. And then on Thursday, we're going to be looking at the weekly unemployment claims before the final numbers on Friday there. With the unemployment rate here, we're expecting a stable unemployment rate at 4.2%. In terms of the NFP change, we're more or less estimating about the same number as per last month, around the 140,000 mark there. Average hourly earnings stabilizing there, 0.4 to 0.3%. So that's kind of the expected results for this week's fundamental. All right. Let's move on to the technicals here. Let's take a look at the Aussie USD here. This one here has been capped at around 69 cents. We do see this one pushed a little bit higher there, but it is being capped by 127.2% extension there. That's about 69.40, 69.50. That's going to be our immediate resistance for the Aussie USD. Failures at this level here, then we're anticipating that pullback towards 68 cents. We do expect the Aussie dollar to be a little bit more on the stable side. I'm not really expecting a huge drop back down to 67. We do expect support to come in at around 68. So expect this to be range traded between 68 to 69. Should this one push beyond 69.50, then yeah, ultimately we're still going to be looking at 70 cents as a really strong resistance level for the Aussie USD. Now, next is the Euro USD, and the Euro USD, as we have previously mentioned in the outlooks in the previous weeks, it is being capped by 1.12 in terms of range. We're currently looking at 1.11 as its immediate support, 1.12 as our immediate resistance. Below that, we still have 1.10, and we do expect the Euro USD to be traded within this range at this point in time. Look at how it's struggling to push beyond 1.12. So even if it does pushes beyond 1.12, it is likely going to be limited to 1.1250, 1.1275 in terms of resistance for the Euro USD. But we are looking at a little bit of an exhaustion here. Obviously 1.12 has been a strong cap for the Euro USD, and we still expect this level to be the major resistance or major hurdle for the Euro USD. Pound USD, very similar scenario here. We are looking at price being, being capped at 1.34, 1.3450. Again, it is really pushing it to the limits there, around 161.8%, very close to 1.34. 40 and 1.3450 level there. Obviously the resistance one on the weekly pivot is located at 1.3450. That's going to be where we're keeping an eye out on the sterling here. Support level, we're looking at the pivot. Pivot is going to be at 1.3350 there. Obviously, that's going to be where price has been bouncing off from last week. So again, we do expect a little bit of a range bound market condition here between 1.3450 to 1.3350. In terms of whether or not it should correct deeper, I think from a technical perspective, we should anticipate the sterling to correct a little bit lower. Now, in terms of how far down that correction is, again, this is going to be very similar to last week. As long as it maintains a position above 1.32, the overall trend for the sterling here is still to the upside. Again, we're keeping a close look on the weekly pivots here. I know we're kind of pushing the limits in terms of the extension here on the Fibonacci. So right now we are going to be taking a look at 1.3450 as a major resistance here. Any failures here, expect a pullback down to 1.3350 and eventually closer towards 1.33, and potentially even support one that's going to be located at 1.3275 on the sterling here. But yeah, overall general trend is still to the upside. We're just anticipating a little bit of a technical correction to happen on the sterling here. All right, this is the Dow yen. You can see how volatile price was on Friday. It manages to push higher, but generally, if we take a look at it from a daily perspective, it never exceeded 145, right? It spiked up all the way up to 146.50 there on Friday, but we never had a daily close above 145. So looking at that, major resistance remain intact at 145, 146. In terms of support level, we're still going to be looking at 142, 141. And so far, that's where price has been finding support intraday wise. If we take a look at the push lower here, we don't actually see any follow throughs from Friday movement there. So I think market is a little bit divided here in terms of where the Japanese yen strength is going to be. Again, this is very political at this point in time. The volatility that you saw on Friday there in terms of the dollar Japanese yen, this is heavily influenced by the LDP election. All the movement happened within the first 2 minutes of round 2 voting results. Obviously, a lot of volatility because we have 3 major candidates last week, and every single candidate brings to themselves a little bit of a different effect onto the Japanese yen. One is a little bit more on the dovish side. The other one is, okay with interest rate hikes. The other one is a little bit on the neutral side. Now, we don't have any confirmation as of yet, but I think the current Prime Minister Ishiba is actually going to call for a general election on October 27. We don't have any confirmation as of yet, but these are early leaks from NHK today. So yeah, going to be a very interesting month here. Again, in terms of on the movement here on a technical perspective, we do have to keep in mind price has not been able to close beyond 145, 146 despite all the volatility there, and also we don't have any follow through with any sell-off here with price breaking below 142, 141. So in terms of major support, we're still going to be looking at 141 as a very strong support for the dollar Japanese yen. In terms of resistance, we're going to be looking at that 145, 146 block on the upside here for the dollar Japanese yen. All right, so with that, good luck with your trades, and I'll see you soon.